Let's talk about index options. So index options let you trade an entire index, like the S&P 500, instead of picking individual stocks. They are cash settled, so at expiration your profit or loss is just paid in cash. There's no stocks exchange, and it's based on where the index ends up versus your strike price. So I'll cover what some of these index options are. The Iron Condor I opened up on one of the indexes, and also before we get into all that, I want to explain what they're based on. So one of them is the S&P 500. So we'll look that up. The SPY, SPY. So let's just get a little overview. This is their stock chart from the past year. So the S&P 500, this is an ETF that tracks 500 of the biggest companies in the US. And if you bought some of this, you basically own a little bit of the top 500 US companies that are public. So what that means is that you basically own a little bit of the stock market as a whole. And notice how the price is around $686 right now. So that is in real dollars. You can buy and sell shares of this ETF and actually own a little bit of the stock market. Now let's look at the indexes. Index options. These take advantage of broader market movements with cash-settled index options, plus there's no early assignment risk. So notice that with these, we have the SPX, which tracks the S&P 500. It's an index. The SPY looks at this index. And also notice how the price, but not really a price, you can think of it as a value or points. It's at 6,857.12. Not actual dollars, but it is a way to index and track the performance of the stock market over time. And if you went to the SPY, you'd see that number looks familiar because the SPY is around $686 with some change. So those are directly related. So if the SPY is at $685, notice how the SPX is 10 times that. And the XSP is 1/10 of that price. And then we have the VIX, which is the volatility index, RUT, which covers the Russell 2000 index, and then INDX, which covers the NASDAQ 100 index. I'm not sure why they don't have a mini version of the Russell or the NASDAQ, because these numbers are pretty big. So if you sold purely a put option on this or mess with call options, those could get pretty pricey without doing spreads. So I'm not sure why they don't have the mini versions of that. But if you went to the SPX, for example, standard S&P 500 index, notice how they don't display dollars. It's just points. But its shape is going to look the same as the S&P 500 ETF, the SPY. Now also notice that you can't actually buy or sell anything because it's an index. They're just numbers. It's just tracking stuff. But you can trade options, which means you can bet on the direction of the index. You can bet on the direction of the stock market. So you can click on trade options, and you think maybe it's going to go up, maybe it's going to go down. Could go either way. So you can pick a date out in the future. So you can see the current index value is about 6,857, and the SPY, that means that price currently would be about $686 per share. And let's say you think that the stock market will either stay the same or go up in the future, then you could go to a put somewhere down here to sell it. So let's pick the 6,800 put. Click sell. So we can look at what this deal would entail. So if you sold this put, you would receive about $2,000 to get into it, and you would be hoping that the index value would stay above 6,800. Because if it dips below that and stays below that through expiration, then you would owe the other person money. But if it stays above, then you get to keep that money. And remember, these are index options, so it's European style. These are not settled until expiration date. No one can assign you any shares early because there's no shares to be assigned. So it's just the value of the contract. If, whatever that is, maybe you end up owing someone money, or maybe you end up profiting. So if you entered into this deal and the S&P 500, the index, if it SPX, stayed at this value, what it is now, or higher, or a little bit lower, you could still win. But if it drops 1.13%, then you start to lose money. Even though the max loss is like insanely high, like around $678,000, that max loss is like the max theoretical loss. Like, this is if the stock market went to zero, super crash. That's unlikely to happen. In reality, your max loss would be the difference between the index's finished value at expiration and the strike price that you put in there. So let's say that we sold a put at 6,800 and the index value ended at 6,700. So the difference between that would be 100 points times the contract size, which is 100. So you would be 100 times 100. The max loss would be $10,000. So it's a little different than what a standard option contract would be. It's not for everyone, but it's definitely interesting in a way to make directional plays on the stock market as a whole without early assignment risk. So that's the normal index. I actually put an Iron Condor on the XSP, the mini index. It's 1/10 of its value. So I'm looking at XSP, which is 1/10 of the standard SPX's index's value. But what's nice about this is that you could just imagine a $sign in front of the index, and that's pretty much the same thing as the SPY, because it tries to track it as closely as possible. So I have $500 tied up in this Iron Condor. We want it to trade between 650 and 715. So this is my position. I received $137 to get into this deal, and if I closed it now, I'd have to pay $130. So we'll let this sit where it's at. If the price holds, then I win, and we can realize that max profit over time if the price stayed the same. Now, what I wish it had was a way to set alerts for it, because that's missing from this index. But because these index values are pretty much exactly the same thing as the SPY, I could just go to the SPY and set some alerts. Say that, hey, warn me if this goes below, say like 655. Warn me if the price goes above 710 or something like that. And I'll get an alert, and then that'll tell me that I need to go look at my position and possibly close it early. So, little different way to do options. Good way for directional bets, and where you don't want to own or sell any of the underlying stocks, because it's impossible with these kinds of things. This is good for people who never want to own any of the underlying stocks, and also never want to be assigned early on contracts. So it's a little different way of going about options. So thanks for watching. If you like this kind of content, go ahead and give me a like and subscribe, and I'll see you next time.